Good morning, Jags. This is Fahad. Today is Monday, August 31st. Okay, let's dive in. Tomorrow is September 1st, and as it usually happens at the end of every single month, the first day, usually either the first day of the month or the second day of the month, we get Macau GGR report, the monthly report. So as a result, the chart that I have in front of me is WYNN Resorts. And now the data is going to come out, and it's going to probably be tonight when it's past midnight in China. So it's probably going to be in the morning already, and these stocks will be making a pre-market move tomorrow. That's assuming the data comes out tonight. If it's not tonight, then it's going to be tomorrow night, which means our time for us, it's going to be Tuesday morning. Anyways, now keep in mind that there was a 14-day quarantine restriction that was put in place way back in January on Macau, and that was lifted in the first week of July. And previously, we were anticipating a breakout as a result with sharp improvement in Macau traffic as soon as that 14-day quarantine restriction was lifted. But it turns out the July number, that the last number that came out, wasn't all that great. It's still showing a lot of skittishness of everybody going and packing in these casinos in Macau. Now, the second time we're going to get this data since that quarantine restriction has been lifted, and I think this number will show more improvement. So I'm expecting a breakout in 3 stocks as a result based on this data. The first one is WYNN Resorts. As you can see, WYNN Resorts on Friday had a power candle when entire travel and leisure sector lifted higher sharply. We're already positioned in Marriott call options, and I also had a podcast about that, similarly with Hilton and such. So casinos are also starting to rally along with the group. We had a high volume breakout in WYNN Resorts, and there's still a lot of air pocket into the stock up to about $103 per share. So it closed at 91. There's still a lot of grounds to cover. And if you go to Las Vegas Sands, LVS closed at 52. This one too has a lot of air pocket still, and it has room to run up to $56 per share. So that's another 7-8% to the upside. And purely technically speaking, of the 3 companies, the one that sets up best is Melco Crown, MLCO. Melco Crown had a very high volume push back on August 11th. And then the stock has been consolidating for the past 3-4 weeks in a tight bull flag. If Melco Crown MLCO is able to take out this $20 resistance from this breakout from this bull flag, and you can see the volume has been surging again last week and it was a nice candle, then I think there's room for this to get to about 22 or maybe even go all the way to new 52-week high. So keep an eye on all those 3, but I have to say, technically speaking, the bull flag looks really nice in Melco Crown. Now, also keep in mind that there are different charts, all same exact chart kind of charts, but looking at stockcharts.com. So here is MLCO. Here's that bull flag, and here's the $20 VOP resistance, and you can take a look at how the volume profile has been consistently improving. And similarly, if you go to WYNN Resorts cleared a major VOP resistance, and these are my levels, little over 95, and then near $100 per share, but could be then on its way to all the way to 103. You can see the volume profile picking up. And then here is Las Vegas Sands. Similarly over here, this $51 has been a major resistance. Multiple fail at this attempt in the past 3 months, but it cleared that on rising volume on Friday. So this thing is also starting to push higher. On WYNN Resort side, just last week, we also pointed out on August 28th, and if you go to the activity tracker, you can see the history over there. On August 28th, there was a large buyer of 1,300 of the January 100 calls in WYNN Resorts, paying up to $11.30. That's more than about $1.7 million in bullish bet. And so there has been a recent pickup in all the option activity as well in the entire group, particularly in WYNN Resorts, where it seems to be the favorite of all kinds of hedge funds. But then also looking at MLCO, if you look at short-term September calls, you will see there's plenty of open interest in the September month. And so in Melco Crown, notice this 15,000 open interest. If I zoom into this, you will see that this was about 2 weeks ago. the large bulls stepped in, and there were over 12,000 of these September 20 calls were bought to open for up to $1.95. And on Friday last week, they started to come back and started to add to that position with a few more thousand contracts added to this. So let's see if, going back to this chart, if MLC will start to push through this 20 and will start to break out from this bull flag. And the last thing that I will mention is taking a look at two different comments. Both come from Bank of America. When it comes to Las Vegas Strip in particular, there has been a brisk improvement in the retail and the restaurant segment of Las Vegas, according to Bank of America credit card and debit card usage. These lines that you're looking at are 7-day moving averages with the year-over-year change in those 7-day moving averages. And you can see that there was, when all the Las Vegas casinos opened, first in June, you saw a sharp pickup, then flattening of the price action. But just in the past 2 to 3 weeks, we have seen another leg higher in total amount of spending that is taking place in Las Vegas. Now, I have to say that a lot of this improvement in Vegas are actually happening at the restaurant level as well as the retail level. But when it comes to banquets in a lot of these casinos and conferences, or if you look at the room rate survey in Las Vegas, it's still rather, after a big pickup in June, it's still rather flat. It's the improvement there has been rather very, very slow. And then also keep in mind that McCarran International Airport traffic in Las Vegas was down 76% year over year, according to the data that came out last week. This was for the month of July, so we do not have August data yet. So I'm hoping that we would see a pickup in the McCarran Airport traffic as well, but that data won't come out for some time. But particularly looking at the going from Las Vegas now to Macau, which is my main focus right now. Macau July visitations were up 228% sequentially month over month. Now understand that the base is so low right now because on a year over year basis, total Macau visitation was down 97% as of June. But however, from that very, very low base, we have seen a dramatic improvement in the month of July. The total July visits were up 228% sequentially. Now, when we get the August data tomorrow, I expect that number to also be in triple digits. So we're going to gradually work this number off. And on a year-over-year basis, this will still look absolute disaster, but it's definite improvement that is taking place from Macau. Lastly, I will also mention that the Chinese RevPar growth is now down only 19% year over year. Remember my podcast from last week when I mentioned that the overall RevPar growth has started to improve in various parts of the country, but China in particular is showing sharp improvement compared to the rest. We pretty much have control over, and the life is getting returning back to normal. It's quite amazing that the Chinese RevPar growth is now down only 19%, what it used to be more than 98% decline up until 3 to 4 months ago. So all of these things are positive for Melco Crown, which is a nice looking bull flag, and Wynn Resorts in Las Vegas. And let's see when the data comes out tomorrow or on Tuesday, whether these stocks are going to power higher even more. That's it from me. Jay?
Morning, Pod. So I'm going to keep with the restaurant theme and today talk about Duncan Brands, DNKN.
Yeah.
So on the last earnings call, the company talked about a number of items, and I'm going to talk a little bit more about same-store sales in a second, but I first just want to start off with the menu innovation it discussed. It highlighted that they launched some new specialty beverages such as matcha lattes, which is a green tea type drink, and that has performed well as of late, especially in newer markets. In the final 2 weeks of the quarter, they launched Dunkin' Refreshers for $2, and that has driven high trials by a younger, more female demographic. You also have snacking products such as croissant stuffers and snack and bacon, which they say carry an attachment rate of greater than 95%. And then lastly, they highlighted that they are continuing their high volume smart brewer installations in all of their stores, and they expect that to be complete by Q1 of 2021. Now turning to same store sales, comps were down in Q2, but Credit Suisse noted that same store sales have improved sequentially each week in Q3 to date. Now, Duncan attributes that outperformance to a number of factors. Number one is menu innovation, which I just talked about, but also 70% of its asset base having drive-throughs. Drive-throughs actually had positive same-store sales in the last 2 weeks of the quarter. Your mobile order and pay, delivery, as well as expansion to curbside pickup. Now, last week, KeyBank was out with their weekly first look data, where they provide a look into spending and customer growth trends. And for the week ended August 23rd, Duncan trends remain strong, as you can see from the chart. If Credit Suisse talked about, the July trends, how they have been improving sequentially each week, you take a look at August and you've actually seen an improvement from July. Now, KeyBank attributes this to possibly consumers returning to work in the Northeast region, which the bulk of their stores are in New York, Connecticut, so on and so forth. So trends remain strong for Duncan. So it's just another restaurant to keep an eye out.
These are pretty significant green shoots over here, I'm seeing. So we went from, for most of the year, we were down on a year-over-year basis, but now we have gradually shifted to positive, and then we went into, in July, we started to see mid-teens growth. Mm-hmm. And then in August, it has been well above 20%. I'm assuming this is year-over-year growth. So this is even better. That means on the year, the stock has actually now inflected positive. So COVID crisis is over for this company based on these trends. Mm-hmm. It's Starbucks is just starting to inflect positive, just in the last couple of weeks or so, and very minorly, up only 1 to 2%. And I would say that for Starbucks, because it's so exposed to the commercial side of the economy, where you have Starbucks basically on every single block in New York City and such, and those commercial buildings are going empty, more or less. Dunkin' is far more widespread in terms of its locations, and much more factored in the suburban areas as well. And then Shake Shack, naturally, we talked about this too, and that's also a very healthy sign of improvement. Dunkin', this is very, very impressive. I like this. More than 20% growth for now, coming for 3 consecutive weeks on a year-over-year basis. That's got to be positive for the company. So impressive. And yes, the chart is starting to take out some major VOP resistance, should continue to rally from here and go to new 52-week high. It still has a lot of room to go before it gets to that point. Good stuff. Chronicle?
Morning, Fahad. Looking at the Chinese tourism sector this morning, the latest Chinese non-manufacturing PMI that was released overnight continues to show service activity accelerating, and ING alludes to respondents from the travel industry reporting improving demand for domestic leisure trips. I know everybody likes to talk about TCOM, but fundamentally, I don't like TCOM. Also, last I checked, Trip.com is planning to delist from NASDAQ. So instead, I've got 3 alternatives I'm watching for upside, and I'm going to talk about them from order of lowest risk to highest risk, but also probably the highest reward. First company is Huazhu, symbol HTHT. This is probably the one with the lowest risk. The company operates hotels across China, and they make use of pretty interesting technology like facial recognition for check-ins and mobile apps to unlock rooms. Most recently, the company reported 97% of their hotels have resumed operation, and their weekly occupancy reached 74% in late June versus national average of 47%. And if the latest PMI is saying demand for travel is improving, that means we can expect August occupancy will be higher than 74%. Note that RevPar in Q2 was 65%. This is one of the larger hotel chains in China, low risk, but also probably the one with the lowest reward out of the three. Second company I would classify as medium risk, but definitely higher upside than HTHT. Company here is Green Tree Hospitality, symbol GHG. The main reason why there's more upside here is than HTHT is simply because it's a much smaller hotel chain, and so they're going to see faster recovery and faster growth. And they have a strong presence in the countryside and rural areas, where if you think about it, it's probably where people from the tier 1 and tier 2 cities are going to travel to. Despite the pandemic, the company has continued to build hundreds of new hotels over the last couple quarters. Like during Q2, they opened 111 new hotels, with 72 of them out in the lower tier and popular rural areas. And they currently have a pipeline of over 1,000 hotels over the course of the next 2 to 3 years. So this is going to be a much faster grower than Huazhu. I also like how they save costs by building their hotels with without a lot of unnecessary things like swimming pools and bars and lounges, because when it comes to China, what you'll find is that the overwhelming majority of local Chinese tourists don't really use those sort of things. And since the company is aiming for the countryside market, then most of their customers are going to be locals, because the foreigners are mostly just flocking to the big cities, while it's the locals who want to get out of the cities for a bit. So Green Tree's occupancy was at 63% for Q2 because of the pandemic, as well as the new supply coming online. But still, 63% is much better than any of the American hotels have been reporting. And I'm expecting it to get better as we start to get into the typically busy end of the year, starting around October. And lastly, if you look at the 2-year chart, this one's been making a 1-year basing formation. The third and last company, and also the riskiest trade out of the three, is China Southern Airlines, symbol ZNH. Fundamentally speaking, this airline does have a lot of problems, and I also dislike the way they report their numbers, but doesn't mean the stock cannot have temporary explosive upside. Because if we're seeing local tourism improve steadily, this company is going to see massive benefit based on the fact that 84% of their flights are domestic. And I forgot to mention that this is the biggest airline in China. Probably should mention that. Meanwhile, on the international side, I'm expecting some upside as well, because the government in China is starting to loosen a lot of its air travel restrictions. I think it was just a couple of weeks ago when China agreed to double the number of flights between themselves and the US to 8 per week. And also this month, China eased restrictions and resumed many of the flights to and from Europe. So fundamentally, I think this company still has a lot of secular headwinds over the next several years, but I wouldn't be surprised if the stock outperforms a lot of other Chinese travel stocks in the medium term. So this is high risk, high reward. Overall, I guess the takeaway here is that there are other plays than TCOM, because keep in mind, if all these hotels and airlines start undercutting each other with discounts and low fees to get people to travel following the pandemic, this is all going to eat into Trip.com's commission revenue and possibly demand for their package tours. On top of that, these hotel chains are moving to insource reservations with mobile apps and loyalty programs to bypass Trip.com. So in my view, when it comes to China, I think it's better to be long the hotels and airlines themselves. I believe also that Trip.com is planning to delist. So if that happens, it's a moot point anyway.
Okay, lots of thoughts over there. So I'll give you quickly some of mine. So of the three, the one that I like the most is actually this one, Huazhu Group, HTHT. This is a 5-year chart that you're looking in front of you. Naturally, one would say that this is a bit of a slower growth, but that's okay, because we're talking multiple expansion before you see fundamental expansion. So this is not driven at this time basically by a dramatic improvement on a year-over-year basis, but rather multiples expanding as the traffic levels improve. This on a 5-year scale, this is a beautiful breakout, and earnings will be coming up on September 8th, which is next week. Now, while you were talking, I pulled this chart that I think is worthy of attention, which is the weekly RevPar growth in China. And it's mainly driven by some of the top destination where HTHT has its properties, including in Hainan province, as well as Yunnan, Sichuan, and Zhejiang. These are the top destinations according to trip.com, and that's where HTHT has most of its hotel locations. And based on these trends, we're going to see a very, very sharp sequential improvement from last quarter to the current quarter that will be posted next week sometime. And chart has a beautiful look on a weekly scale as it continues to break out. And if I'm not mistaken, I think recently we even saw a little bit of the upside call option activity, which is now deep in the money, these December 35.40, but I can dive into that later and to look more closely. So I like this. I like the space, and I think it goes along with the entire theme that we're discussing, and I will look for continued more upside in HTHT.